S&P 500 on a weekly chart, and the current correction that we're in at the moment, as mentioned before, just seems a little bit small to be a wave 4 in terms of time, when wave 2 here has lasted twice as long as the current wave 4 here. So here we've got sort of 40 odd days here, and we've got sort of 22 days down here, I think. So it's still a bit small. So we're very mindful of another move down here to the fourth wave of 1 lesser degree through here. So as you know, we've been looking at this move coming up through here, and on the daily chart here we can see that it's sort of struggling now, isn't it? It's moved up, it found support, it's moved up nicely, but over the last sort of 3 sessions here, that it is struggling. So one way or another, we're seeing weakness come into the market here, so we need to be prepared for further weakness to come in through here. And even though that the US markets were up roughly 0.5%, the last hours of trade were to the downside. So the closing price is probably a little bit more important than the opening price. Comparing the first hour of the day and the last hour of the day of what happens, and you can see here on the hourly chart that that we're down on the hour. So the wave count that we're looking to the upside here, it can be counted in different ways, but essentially the corrective wave, the A, the B, and the C. So that top could be in there now for the C wave through here. If it's going to be wave 3 here, then we would see a 38.2 retracement level from the low of that point there of wave 2 coming back into here. So look, really anywhere to the wave 4 of 1 lesser degree. So we can pretty much expect one way or the other, we can expect a move back into this area through here, and then a bounce here. Now from this point here, the wave, if it is a wave 4, it could get a bit sort of complicated through here. But in one way or another, we're going to see from this point, we're going to see it move up here for the 5th wave, or we'll be looking for a new low down through here. So it's really a matter of, we know that over the last few days it's been, spending more time here. So we know that it's meeting headwinds. So we can expect, some sort of corrective price action here. And that's why we were tightening our stops up on our robo trading and putting some short positions in there as well. So we'll continue to look at that. But as I mentioned, before the week started, we won't know if we're going this way or this way. We have a bias for that, but we won't work it out until this is matured here somewhat, and we've got the 1600 as support or resistance. From there, there's still the S&P 500 here. If you're looking for long trades, then you would need that 1620 there as support to the long side. On the short side, well, it's better to wait for the 1600 to become the retested resistance for the short side of the market. And while it's above the 1600, well, it is supported, and we've got positive price action moving to the upside. So yeah, there's not a lot we can do, but longs 1620, shorts have to wait for the 1600 there. The Dow Jones is dancing across the 15,000 here, as we sort of expected. We also know that this is an 8-hour chart, but we know that it's spending more time here, and this is what we were looking for, in terms of picking the next direction, because quite simply, giving it enough time here, coming out as support, well, then we know we're on the long side, and on the short side, we know if it sort of struggles, obviously if it finds the 14.8 here as the retested resistance, then we'll be making new lows at this point down here further. So it's just a matter of allowing that time to unfold across here, and the wave count up here, it can be counted in an unfinished positive manner, or it can be counted as a corrective move that is complete at this point here and would work lower from there. So let's just allow it some time to to do its thing here. But as you can see, yeah, look, it's just going to take a bit of time. That's all. Another session should shed a little bit of light on that move there. The 61.8 retracement level, if we could count it as 5 waves up here, would bring us down to the 14.8 sort of area here. So the 14.8 as a retested resistance certainly opens the door for further downside. But if you're trading, you should be able to see what occurs here. But at minimum here, you'd be looking at a move down through here, a retesting of that point there, and if that was going to be the case, then you would take that new low out there. So you could use the 14.9 here as a point to work a trade from as such. But as you know, when it comes down through here, it will bounce off group 1 or the 900. It's got to work lower from that point. So having the 4.9 as a retested resistance, it could be at the start of something larger to the downside, and you could add under the 14.8 at that point. The UK market, it does appear that we do have 5 waves up through here. It's to count, it's a bit rough, I know, but it does count reasonably well. So we can expect after 5 waves, if that's finished to the upside there was quite a sharp spike in through here. But if it's finished up here, then we may see one more little high here. That's what I'm trying to say. But after that, we should see, at minimum, we should see some type of correction across that 6,300 there in terms of an A wave, a B wave, and a C wave that would probably pull back to this support area from here. If that was going to be the case, then would be further upside from there. So let's just allow this to unfold. It'll unfold with the S&P 500, as will the DAX will as well. We can also count 5 waves up here as well. But of course, that's going to be moving in line with the US markets as well. So the 8,000 here, support on top of the 8,000, retested support, would see us on the long side to that point. Otherwise, we need to allow this to play out through here in terms of an A, a B, and a C wave through here, and then work back up through here. If the 7.9 here becomes the retested resistance, then we know that there's a reasonable possibility that it can move further to the downside and start building a trade in from there. But we will, it's with the same with all the indices. We'll know at some point what to do, and so it's just a matter of having a bit of patience and waiting for that. The Australian market, the rally that we've had up, this is the 2-hour chart, the rally that we've had up through here, it also appears to, it can be counted in 5 waves. And if that's the case, then the 61.8 retracement level is close on the 4,700 here. So we'd really want that to stay in play here. By looking at this particular structure here, this looks like a bit of a 3rd wave down, a 4th wave to here. So it's quite likely that we can get another low in through here first and then a move up. But we don't really want to see it coming too far past the 61.8 retracement level. So definitely not the 46.50 area, which is sort of down here. That would certainly put it in a bearish situation. But the 46.72 area would be, about the limit we want to see this move to the downside. So if it comes too far down, then we've got a bearish pattern occurring as such. That's sort of on the cash market here. We can see that we've had that move up through there, and the 61.8 is the sort of 4,700 here. So we don't really want to see it going down that much. And the move down yesterday had lower volume than the previous day. So, it is drying up a little bit. The other thing too, that base metals were very strong last night. So, if we don't see it from the banks, so if we see, say, CBA here, for instance, let's have a quick look at that. Of course, here with CBA, I mean, it's a leading bank, so we can keep keep sort of an eye on it. Same as the XJO in a sense, is the same pattern. So the 65 here is the support, which we recognised, and we know that we'd seen a bounce, and the bounce that we currently got here so far, as you can see, is corrective. It's in 3 waves. Now, what would make it corrective is this this move up through here being wave 1. So if we're looking for, we may only have 4 waves in here so far, but the top of that bar there, that there, if we get a break below the 66.50 area, the high of that 66.44, then we know that we've got a bearish banking system. So if we see a move below that one there, then we know that we're going to be seeing more downside on the banks here. So we really want it to stay above, say, the 67 here. So let's see how that goes, and we will get support from the material sector, as I mentioned. Will we get it from here as well? So the Commonwealth Bank is a good leading indicator on that. So that 66.44 high there, technically that's the one there. Alrighty. So yes, just in terms of trading this here, if on the 20-minute chart here, it does appear to be corrective up through here. So, and this as an impulse wave down through here. So look, if support is found on the 47.30, the top of group 1, well, then you can glean a small position there, and you can look to add on top of the 47.50 if that's the case. If that's not the case, then we expect a new low to be made through here. It just won't be that, it'll just be a bit choppy because there is support in the material sector, and we're also into the 4700 here as well. So expect some choppy price action in here, but long trades would be looking at 47.30 and stops, of course, at the 47.16 sort of area. Alrighty, let's have a look at the commodities. Okay, starting with gold, we're looking at wave 4 here, and this rally up through here. So we can see that that it's reached its 38.2 retracement level at the 262 area here as our target. But we're also mindful too that the wave 4 can pull back to the wave 4 of one lesser degree, which would be up here at the 1300. So we're considering this leg up through here just the first leg of the wave 4. So it would look a little bit like this here on the 20-minute chart here. We're looking for 5 waves up through here, which may not be completed just yet. So the 1, the 2, the strong third wave, the 4th, and the 5th wave up here for the A wave, then an A, B, and C for the B wave, which can pull back 61.8% of the wave A. And then once that's completed, we'll be looking for a wave C here, which would have some sort of equality with the length of wave A here. So wave A and wave C up through here would have the same, roughly the same length. So that's what we're looking for. We're looking for, and this is just a simple wave 4 as well. Be mindful that it could get a bit more complicated, but that's roughly what we're sort of looking at here at the moment. The base metals are also rallying higher as well, so it looks like they're going to be the bounce off the 300 here, or the trading level 3 here, is going to see a larger bounce. So we're looking back up to the wave 4 of one lesser degree here, but it also can go higher than that as well to this to this point here. So we just need to track this up here. So what I was looking at here, we've either got an A, B, and C wave up through here, and that would count as the 1, the 2, the 3 up here, the 4, and the 5. So we're looking up at the 320 mark up here. So we're going to see base metals be positive for a little while to come just yet. So that will give us the support in the material sector, obviously BHP and so forth, and also for the Australian dollar as well. The oil market is still chuffing to the upside. So from this last move that we had down through here, which has appeared to be in three waves, an A wave in 5, a B wave, and then the C wave here in 5 for the wave 4 here. The move up through here is still continuing. We've got wave 1 here, wave 2 here. This is the third wave in here. It may not be finished, the third wave. We may get one more high here, but if this is taken as the fourth here, then we'll see another high across here. But you know that once we've got 5 waves here, then we'll be looking at an A, B, and C wave here at minimum. Can fail from that point, but if it finds support back on there after that, then we'll be looking up at 100. But of course, this would follow stock as well. So what happens to the Dow at the 15,000 and the S&P at 1,600 will have, a direct impact on what's cooking here. So bear that in mind. But this structure, don't go chasing it. It needs to do its thing. It's had its trend, and after a trend, you get a correction or a top in place. So let's see that unwind through here. But if you are going to trade that long, well, then obviously you need the 80.98 as support, and then build the trade in through each one of these levels through here. But don't expect too much. Just expect the first high above the level, then a correction across here. Alrighty, let's have a look at FX. Okay, the US dollar, no change here, so to speak. We know that we were getting a sort of a top, it was, in place in this area here. It took a little while to get it, but it does appear to be unfolding now. So we'll be looking at this A, B and C wave through here, basically a correction across the 83, which is the top of group 1. We're obviously bullish on the US dollar. We can see that going much higher, but obviously one step at a time. And after 80 here, the next important numbers is the 83 here, because support on 83 psychologically separates it from 80, and then it can move to 85 after that. So we just need to go through this here, but obviously this is going to reflect back in the euro at its group 1 level as well, so the 130 there. So just looking at this further here, you can see that this is obviously the dollar here is obviously making a move back down. The important thing here, though, is that at 83 here, the group 1 here is subgroup 1, so the 83.20, the pivot within group 1, once that becomes the resistance here, then it's normally the case of the market unfolding back, much deeper in here as well, because essentially it's failed to find support on the 83.30. So if it had done that, we know that if it gets support on the 83.30, it'll get to the 83.50, and you'll trade to that, get out, wait to see if you get support. If support comes in, well, then you're off again. But in this case here, it's just still still testing for the first high above the level, and that seems to be in play. So it's reasonable to expect a larger correction here, and if that's the case, then we would see the opposite with the euro as well. So in the euro here, this A, B and C that we had here, as I mentioned before, we just figured that it was a bit small for what we were looking for. So the natural thing to do is to expect a larger correction to play out through here. So we'd be looking at this now. These two lows here were pretty much the same, so it's like a flat correction. So we may not see that come as high here, but we know that there's going to be resistance in through this area through here. So we know that we're it's going to be a little bit sort of tricky trading long through this area through here when we know that there's sort of resistance there, but we are looking for a larger A, B and C correction from that point there. So in nailing that down a little bit here, we can see this on the 1 minute chart here, just as an example, that we've got this correction across here. It does look like a triangle sort of pattern. Either way, it should see higher ground through here, so you can look for support on 30.65, the beginning of group 2, and keeping the stop down at the 56 under the 60, and expect to see higher ground. But you can look to add to this on top of 72 as support if it gets there. Yeah. Alrighty. The Australian dollar. There's a possible change in trend here as well in terms of that this move that we're counting down through here, we figured that there would be a little bit more to come down in through here, but that's not the case. So we've had to revisit the wave count from here. We do have 5 waves coming down through here, so it does suffice. Calling this bottom of wave 3 in here and looking for wave 4 pullback into this area through here, and this would sort of line up with the base metals of copper that we're just looking at as well. So as long as this maintains its above the 92 there, then we'll be looking for an A wave, a B wave and a C wave higher into the 95 area through here. Of course, there's going to be, resistance coming into this area here, as you can see, and the 92 hasn't been retested just yet as well. So let's go in there a little bit closer. So this is how I'm sort of counting it up through here in terms of, in this case, the 1, the 2, the 3, the 4, and then the 5th wave to come up through here. But the 92 hasn't been tested as support, so that sort of bothers me a little bit. But while it's got support above the 92.30, the group 1 there, then it can push higher, and it's only when the 92.20 becomes the retested resistance that would see it back through here. But this wave count up through here is suggesting that it won't pull back, that it will actually move up to the 92.72. So that would be the target for the upside there. That's where this particular structure would end at that point, but it would end in such a way that we would get an A and a B and a C wave that could pull back the 61.8% of that move up through there. So that would bring us back into the block of support through here. So that's a real possibility coming back through there. So the idea would be to count 5 waves up through there. Because the extension was in wave 3 here, then wave 1 here will have some sort of relationship with wave 5 here. So it may not get to the 92.72 there, but it is on moving up on the US dollar pulling back, and plus the base metals being stronger as well. So take that on board and be on the long side there. Alrighty, I think that's sort of it really. Yeah. Alrighty, well, good morning, good luck, enjoy the day ahead.